it's like these HOAs and HOA boards, which pretty much run the HOA, are self-policed.
Yeah.
Like the people on the HOA board are condo owners.
Yeah.
And they, like me, and my first condo association says, I want to get involved. Like the reason I got involved in that, I just wanted to understand it. That was all it was. I own a piece of real estate. I want to understand what makes the HOA go.
I have to know.
I think it was like maybe in my first 3 years or so, there were mild increases. And then it might have been the fourth or fifth year. I think they went up 5 or 6%. I'm like, why?
Yeah.
I don't understand why.
Yeah.
And then that was kind of, I talked to some people, oh, you're on the board. Why did that happen? They're like, look, the price, gas went up, and gas is part of our HOA fee. So that was the main, if you look at the budget, people are sharing stuff with me. If you look at the budget, look at how much gas went up between this year and this year. So we had to go to the unit owners because the gas is part, we have a master account with PGW in Philadelphia. So we have to raise it. Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, we're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim?
Yes, Sean.
Who's a good client for PMR?
Property Management Redefined is looking for property owners who value three things: accountability, reliability, and a results-driven approach. They want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value because they do it so well is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. They'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Timothy Michael James Garrity the First.
And I'm Sean Mooney.
What's up, bro?
How we doing?
Good. Oh, what are these?
These are the brand new, hot off the presses, B&R licensed 1 of 50 stickers.
You could take this to a club and it would count as your tip after they mix your drink.
True story.
No, seriously, folks. If you want to get one of the new Bricks and Risk stickers, laptop, car bumper, garage fridge, snowboard, 10-year-old water bottle. I mean, because we want all the 10-year-olds to go to school with Bricks and Risk stickers on their water bottles. Because then they'll just automatically make a whole bunch of friends that they didn't have before.
I did get a, you'll enjoy this. I did get a new snowboard for this
did
year.
you?
Yeah.
Okay.
And my first sticker on it, well, not the first sticker. So on a
Rogue Bricks and Risk?
No. So you have your board and then you have your bindings where your feet go.
Yep.
And then in the middle you got because you come off the lift and you're not buckled in, so you have something to catch your foot. Oh, I gotta show it to you. It's Doom.
Oh yeah.
Yeah.
You sent it to Tara. Maybe he can pull it up,
dude. So I was like, I don't even know how I got the idea.
Is it just says Doom or it says it's the mask?
It's the album cover from Doomsday when he's got the mic.
Oh, sick.
And I didn't even, because I was looking, I was like, I don't want that. I was like, I wonder if I could just make my own.
I mean, you probably ask yourself that question every day.
Pretty much. So then I found a guy, shout out Tahoe Stomp Pad.
All right.
I'll link it up.
Shout out to Tahoe Stomp Pad.
And he was like, I've been doing these for like ever. This is the coolest. I'm like, are you a Doom fan? He's like, dude, I love Doom. I was like, you do, and you never made one, and now I'm coming to you. And
Oh, that's cool. So you connected over Doom.
Yeah.
Awesome. All right. So, want a sticker, email.
leave a review.
What's our email?
The email address, folks, is bricksandrisk@gmail.com.
Right. Nice pricey domain email address right there.
Fire it up. Send it over, and we'll get you.
We'll mail it to your house. Seriously.
Imagine you were like at someone's house and you went to grab a beer out of their fridge in their garage, and
it's on there. Yes. All right. What are we talking about today?
Today we're going to be talking about condominiums in Florida and why this is really at a point. It's a tipping point where things are starting to fall apart.
Remember I made the example, we say Florida, but other people say Florida.
Florida?
Florida. We vacationed in Florida.
That's like how you say water.
And
I say water.
I basically just, dissed people from the West Coast. Sorry, West Coast.
Fair enough.
We're Easters.
But this is a very good topic in that the insurance and the real estate are intersecting because the forces of the insurance are dictating real estate pricing.
This is another episode where the real estate and the insurance is locked together.
A little synergy of the two, if you will.
All right, so you found this article. Let's pull it up real quick. And then
New York Post article.
Here's the article. Why did this one, aside from what we just said, why did you throw this one on the nothing doc?
So these topics, stuff that just catches my eye and, things happening in the marketplace are kind of like things that catch my eye. And this was just one that everybody moving to Florida. Florida's great. Florida's the best. And then this is kind of the antithesis of that is like hold your horses.
Here's a big con.
Right.
Of what people are dealing with right now. Because condos are a little bit more on the affordable side in any market.
Well, you're living with 500 other people. You don't have your own home, so there's going to be a premium for your own home, so the affordability side would fall on the condominium for sure.
Here's a fun fact for people who don't know a lot about condos out there. Did you know that the ownership of the condo itself, you only own the space within the walls? Meaning a lot of times with a condo, like the exterior, the roof, if you got a deck, all those things, those are usually considered common elements or limited common elements of the homeowners association, AKA the HOA. So you only really own space, not necessarily a building.
Well, think about it.
And no land.
My cousins have a condominium on the beach in Brigantine. If that thing burns down, you don't really own that. Like, you know what I mean?
Yeah.
You have like ownership rights in a space of the new building that would get built.
And this is why, aside from square footage usually, condos they're not as expensive because you don't really have land. And that's really what it is. Most of the time, it's like you own space, not land.
Yeah.
Whereas you have a house, even if it's a townhome, and there is no HOA. It's a row home. You own the land.
Yeah, that lot is yours.
House. It's yours.
Yeah.
So, all right. So let's talk about condos, and let's talk about when this article came out. Like
let's timestamp it.
And let's start from an insurance standpoint. When did this come out, and why is it happening in Florida?
So the article was released in April of 2025. So less than a year ago. And what the overall statement in the article was the effects of what is happening for condominium owners that in a lot of cases are really catching people by surprise.
Yeah.
It's and the one example that's given is family moves down from New York, buy this place, $300,000 or something, set up by the beach.
Yep.
And you're running the calculations for what your monthly living.
Yeah. What I used to call
would
it,
be.
what's your PITI? Your principal, interest, taxes, and insurance.
Yep.
And if you own a condo, you got your PITI, plus you have a monthly condo fee.
Yeah. So you have your mortgage, you have taxes, you have insurance, and then you have your association. And that's bundled together, and that's your monthly nut of what you'd be paying for your residence.
Yep. All right. And let's also, so this came out April 2025, right?
Yeah.
Let's also talk about the buildup. We've talked about this on lots of past Bricks and Risks episodes. The buildup of where insurance premiums started going up by double digits.
Yeah.
Obviously very high in Florida due to natural disasters, a lot of water around, things like that. Talk about that.
Yeah. And so I guess it would start, let's go back to COVID, right? And COVID, a lot of people were leaving urban areas to get to Florida.
Yep. They wanted open air. They wanted better weather.
Yep.
Whatever.
Well, it would kind of open the door and give them an excuse to leave.
Right.
I don't like this.
This is brutal here.
Right.
Let me go somewhere where it's warm. It's my opportunity.
Right.
They've probably already been thinking about it for 5, 10, 50 years.
Or have family there, or vacation there, or whatever. Have some exposure.
It can be a second home if we want it to be.
Yeah. And so during COVID, a lot, with all these people going down there, it really, had a lot of influx of people moving to that area.
Yep.
So that was kind of the first steps of what was going on.
And they were having supply-demand issues. So if everyone's moving to a certain area and there's only so many homes and condos for sale, that's when prices start going up drastically.
Yep. And so the next kind of thing that occurred in Florida was the collapse of the condo building
in Miami.
And
it was?
I think it was in Miami or just outside.
Yeah, like a Lauderdale, Miami, West West Palm Beach or something.
And so that really was the start of when things started to
insurance companies were
come undone.
Yeah.
Because they've always had storms and they always could kind of maneuver around it, but the liability of what happened after that occurred was monumental.
Yeah.
In the way that it impacted insurance, and it really, I guess, would say put a microscope on it, right? Because it was kind of exposing all of these condominiums and the boards, and everyone started to point fingers as to how this happened and why it happened, right? So who's responsible?
Right.
Is it the board, right? Did they not do a good job of maintaining this building?
Yeah, was it negligence of the board?
Was it the township or the city code? Because they should have been making sure that these buildings were up to code, and could this have been avoided if they were there doing that?
Yep.
Right. So anytime you have a circumstance like this, where something of this magnitude happens, everyone starts to point the finger. Everyone's looking for the responsible party. And then as the end result being, what steps can we take so this doesn't happen again?
Yep.
And so that was kind of the straw that broke the camel's back.
So you had COVID, people flocking to this area.
Yep.
Then you had the building collapse.
Yep.
And then in general, it wasn't just Florida, it's just the insurance industry in general, due to inflation and the cost of labor and the cost of materials. Yep. Insurance across the entire U.S. started going up by double digits.
Yep.
And then what also was happening in Florida, so you have these skyrocketing insurance premiums because of the reasons you just gave. But then when these condo buildings were being looked at with a microscope, fine-tooth comb, whatever you want to call it, they started doing special assessments. Because they're like, we have to have a structural engineer look at this building or our buildings, and that's going to cost, I don't know, $50,000, $100,000. So now we have to charge each condo owner $5,000, $10,000, or $1,500. It doesn't matter what it is. It's money that you weren't expecting to pay, and you have to pay it because you're an owner in that condo building and or HOA.
Yeah.
So then the special assessments started happening, which also at the same time, they're probably raising like their monthly HOA fees because they're like, we have to do a combo. Special assessment because we got to pay the structural engineer, but we should maybe do like a 3% or a 5% increase of our monthly HOAs to start padding the bank account because there's like all sorts of issues going on.
Well, that's what it was too, is that the other thing that came about when you put the magnifying glass, these associations didn't have the reserves.
Yep.
Like if something happened to a lot of these buildings, who's footing the bill?
Correct.
It's going to go back to each of the unit owners.
It comes to the owners because the people who own the condos own a small percentage of the HOA. The board is just there, like it's a charity. Like that's volunteer work. Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth. So if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show.
But if you need to get the inspections done and then they find work that needs to be done to the, you could be talking $20,000. Mm-hmm. Well, what if that homeowner, unit owner doesn't have that money?
Okay, I'm going to give a really good example here. Back from the first piece of real estate I ever owned was a condo.
That was the first one?
First piece of real estate I ever owned.
Yeah.
So I don't need to name everything. I'm just going to use this example. So I buy a condo. I actually ended up owning it for 17 years. So I owned it for a very long time. I only sold it a couple of years ago. So I buy this condo and I house hacked it. So at the time, it was me buying it by myself, but I brought in 2 roommates and they were paying me rent. Shout out to Pav and Fresh.
Oh, okay. Yeah.
Okay, so I'm owning this condo. And what I was learning is like based on the price point of the condo, my condo fees were kind of expensive.
Yeah.
Okay. They included some utilities, which added to the monthly cost. Not all condo associations do that. But then what happened was I'm kind of curious. How do the condo fees get established? Like, what is that? Oh, there's a board.
Based on what?
There's a HOA, Homeowners Association board. And if you want, you can throw your hat in the ring and you can
run for office.
You can run for the board. Yeah. So someone in the community came up to me and said, you should run for the board. Because I was doing real estate, like I was involved. I'd go to the pool, I'd meet people. So fun fact, the first time I ran for the board, I lost. I didn't get on the board. And I was a little pissed.
Who did you lose to?
I don't even know. It doesn't matter.
I thought you would be like, it's Bill Smith, and it was 1999, and that.
I'm not competitive like that. So I lose, a little pissed off.
Why were you upset? You really?
Because I wanted to be part of the board.
You really did.
I did. I wanted to learn. So I was like, okay, I'll run again. Run the next year. I get on. So I get on, end up being on the board for, I think it was close to 5 years.
Yeah.
I started out as a board member. Then I was the treasurer. Then I was the president. Shocker. So doing all that, the reason I want to make this example, when you're on an HOA board, do you know what the HOA board starts like thinking in their head? They're like, how do we keep condo fees as low as possible? Because it's a little bit more of a charity. They're thinking of the unit owners and themselves because they're owners in the HOA.
Running it like a business.
So how do we keep the condo fees down? So you do that through a lack of maintenance. You do that through no increases. And then what happens over time, if you don't run it right, like you said, you don't have a reserve. Because the thing is, a lot of these HOA boards have like reserve requirements. Who the hell's looking into it? Besides
the
like
board.
Besides
They're policing
the board
themselves.
Besides the board and the HOA owners making a stink.
Well, it should be treasurer. And that's why they have, directors and officers insurance.
I will say the HOA I was on, the first one, we ran it so well. We had I think it was almost like a multi-million, maybe $1 million project to do something because it had like crazy topography. And we were able to get a loan for a big balance of it, but we had a ton of money in the reserves. So we're like, we'll throw in some cash, we'll get a loan, and we'll just increase condo fees by like 5%. So we pulled off like a really big project without any special assessments. So that is what I would call like a responsible HOA board. They're trying to keep everything in check, but they're like, look, how do we financially run this like a bit? What's the best decision for the entire HOA to get this done, improve the community, but also like not do special assessments? And that's my example.
Yeah.
All right. So let's also we talk about skyrocketing insurance premiums, special assessments, and then we also talked about in this article restrictive lending.
Yeah.
So I don't know all the details of this, but what I would say, if I had to guess, go back to my lending days, just like insurance companies raising all the premiums because they're scared about the rising costs and they're not making money anymore.
Yeah.
What lenders would do is they don't want to lend in these condo communities that have, let's call it like lawsuits or like poorly run HOAs or like lots of special assessments with a lot of pissed off owners, because they're like, if we lend in there, like what happens if the thing goes belly up?
Well, I think that's the point of it. And the other point being, there's no crystal ball with this, right? There's no way for the bank to know if this is really like, you're not pulling the board's financials when you're lending out the loan. You're underwriting against you, the unit buyer. And there's this, unknown when you lend in this scenario. And just like the example given in this article, they come down, everything gets blown up. Now you got to sell. But now you got to sell, and so do 30 other people have to sell at the same time, because these assessments come through at the same time for everyone.
It's a domino effect.
Right. And so the bank, what happens? The example given in the article was they had to take, $20K less than what the unit was listed for.
Right.
So now the bank is like, holy smokes. We had it appraised for this. We put out the loan for this. Now they're selling. Like, how does the bank get their money back if the value on this depreciates in such a quick amount of time?
Dude, yeah. I'm just reading some of this right now. It's pretty crazy. So it's interesting you make that point. And then also, like, this brings us to kind of like the last point of the article is that, all right, so let's go back to the beginning. COVID happens, influx of people moving into the state of Florida.
Yep. The popularity.
Prices are rising dramatically.
Yeah.
As the prices rise dramatically, it's harder to get, let's call it a single family home or a non-HOA home. So what happens? People start building condos or selling condos because they're getting top dollar.
Yep.
So the people that are like, hey, I'm in the $400,000 price point, and the cheapest single family residence is $600. So I can't buy that. But there are condos down here for $300, and I'm in the $400. I'll just buy a condo. What are the HOA fees? Oh, that monthly payment.
I can swing
that different.
Yeah.
Than buying a single family. So COVID happens, prices go up, the popularity of condos goes up due to affordability. Okay, everyone buys these condos. Then all this other stuff happens, and it goes the opposite way. I always say peaks and valleys in real estate. Up, 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 and then bang, back down. The reason, as you had said, all these people want to sell now. I don't want to own this thing anymore.
I can't afford it.
I can't afford it. I don't have $5,000. I'm getting sick of this. I want to move back home. Whatever it is. My company's telling me I got to go back in the office now. I can't even live here anymore. There's lots of reasons why people were selling. So, perfect example of supply and demand. When the supply is super high, the demand, is low.
Yeah.
And vice versa. When COVID was happening, demand was super high, so the supply was low. Yep. So it just went the inverse. And then what happens? Too much supply, prices go down. And then when that happens, that's when everyone starts getting pissed off and they start writing articles about it.
Well, you had also, too, is in some of these counties in Florida, they had different zoning laws change, right?
Oh, really?
Because of it. So now you have they give you like a timeline, like this needs to be done in this amount of time.
You have like any basic examples that you know of off the top of your head? Like what kind of zoning were they changing?
Structural, roofing, like windows being hurricane proof. Like there's all of these different factors, that they would institute because they wanted to not have something like this occur again.
Yeah, let's get stricter.
Yeah.
Moving forward.
Like hairline fractures on foundations, like this needs to be repaired. They started looking at all of these condominium buildings, and then you're finding stuff that needs to be repaired. And if you're not, then you're in violation of code. Now fines get done. Like there's a whole snowball effect of all of these different items, the insurance, zoning, and different other things that was just driving prices, for the associations, repairs and everything.
Yeah, well, what's interesting, like you had said before, it's like these HOAs and HOA boards, which pretty much run the HOA, are self-policed.
Yeah.
Like the people on the HOA board are condo owners.
Yeah.
And they, like me, at my first condo association, says, I want to get involved. Like the reason I got involved in that, I just wanted to understand it. That was all it was. I own a piece of real estate. I want to understand what makes the HOA go. I think it was like maybe in my first 3 years or so, there were like mild increases. And then it might have been like the fourth or fifth year. I think they went up like 5 or 6%. I'm like, why?
Yeah.
I don't understand why.
Yeah.
And then that was kind of, I talked to some people, oh, you're on the board. Why did that happen? They're like, look, the price, like gas went up, and gas is part of our HOA fee. So that was the main, if you look at the budget, people are sharing stuff with me. If you look at the budget, look at how much gas went up between this year and this year. So we had to go to the unit owners because the gas is part, we have a master account with PGW in Philadelphia. So we have to raise it. And I'm like, interesting.
We actually, I've seen some instances around here where we insure the condominium association.
The master policy?
Yeah. And I've had instances where I say, reach out to the board member. Sometimes there's not a board. Like if there's like 4 or 5 units.
Yeah, they really don't have much of a board. Like I just sold a condo in a 3-unit building, and there was like one person keeping their eye on everything.
So I reached out. I remember this one in particular, and I reached out to say, hey, renewals 45 days out. Here's a copy of the renewal policy. Here's a copy of the invoice. And they're like, we don't have the money for the insurance policy. Wow. I'm like, what do you mean? And they had been collecting nothing. Like they weren't putting away any money.
There's like no reserve.
They would pay their bills, right? Yeah. Everybody, but there was nothing there in any account for anything.
Whoa.
So my question to you is, have you ever seen it where, and it probably exists, I've never seen it, but is there ever like a third-party administrator? Like, let's say there is no board, but we need to have someone execute the role of the board. Do you ever seen that, where it's not a board amongst the unit owners, but a third-party administrator for board responsibilities?
I have, but only in like bigger HOAs. So like that small, let's call it like a 3-unit, 5-unit, whatever, the Brownstone in Philadelphia, and they chopped it into 3 units, 5 units, this big old mansion, let's call it. Those are really just like good neighborly HOAs. Like, hey, Bill, hey, I'm having a leak. We got to fix the roof. I got a quote. It's $15,000. Like, can I get like $3,000 out of you? I'm like, well, if that's what we have to do, it's like, well, here's the HOA paperwork again. That's the small one.
Yeah.
Then you go to the big one that I was on, and you have.
How many units were in?
It was like over 200 units.
Oh, okay.
So over 200 units. I think we had like a $2 million budget.
Yeah.
Over 200 units, HOA board. We even had committees, because there's all sorts of things going on up there. We had a social committee.
Oh, remember the one?
If you want to play musical chairs on Friday night with fruit punch, we're doing it.
Do you remember the one on Henry Avenue? I believe Newman lived there, and there was like a bar and
Summit.
Was that what it was?
Yeah.
Remember it was like Friday night, like bring a pitcher, fill a pitcher, or whatever it was.
It was awesome. They had a pool. Like sand volleyball.
Like he would invite like 10 people because it was like a party.
Yeah, it was great. All right, so you had the
Shout out to Newman.
Couple hundred units, HOA board, and then we had a big management company, like a property management company.
Oh,
kind
cut
of
the grass, shovel the snow.
They would like manage the HOA.
Oh.
So they would basically be like you said, kind of like that big brother that'd be like, you need to go hire this property management company, because who are you gonna use to clean up the common areas? Who are you gonna use to like clean up the leaves or plow the snow or like fix 80 mailboxes if they break?
Yeah.
Or we had 2 pools. Who's gonna plaster the pools? You had all this stuff, so we needed that large management company to oversee everything. So if I had to guess, in my 15 years of dealing with real estate, the smaller ones, no, it's knocking on the door. The larger ones, you get a letter, you get an email, you got all these big people getting involved, and they're like, let's go. We're special assessing.
It's just crazy. I mean, the incident in Florida, like what's happening down there is just crazy. And actually, Chris was sending us like some values at sometimes that like these prices on these single families are just wild. Even the condos on some of these buildings, depending on where they were.
Not anymore.
I know. It's wild.
It is speculative.
But I guess that's like Florida in general, right?
It is. Yeah. It's a second home. It's like paradise. It's like, you got a home like in like the Bahamas. Like the industry there is tourism. Like that's the industry.
Yeah.
All right. Why don't you go ahead and shut this one down?
All right, folks. Thanks for holding on. If you want to get it, reach out to us. Hit us on the email, bricksandrisk@gmail.com. You can find us on all audio platforms, Apple, Spotify, Amazon. Leave us a review. And you can watch the video.
Get a sticker.
Grab a sticker if you'd like. YouTube, we're on there. You can watch the videos of the shows. And LinkedIn, hop in, find us on LinkedIn. We've got a great community there. Sign up and get logged in.
That's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you next week. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.